Market set to open higher this morning in front of CPI data. Will it stick? We'll talk about that coming up on 3 Minutes on Markets and Money. This morning, we're going to be looking at the CPI inflation print for April. It's expected to come in at a 0.4% rate on a month-over-month basis. So two things to be looking at here importantly are, one, do we come in slightly less? The Manheim used car index has been dropping sharply. We're starting to see home prices coming down. We'll see if that feeds into maybe a little bit softer month-over-month change in inflation. We're also looking at the annual rate of inflation. Now, this is the CPI number, is what does the annual rate of change look like? That is now comparing against a stronger April print from last year. We may start to see what we consider to be the peak of inflation here. And this is going to be interesting from the Federal Reserve standpoint about them hiking rates and tightening monetary policy. If inflation starts to come down, combined with weaker economic growth, do they become less aggressive about their rate hikes and monetary tapering? And if they do, that's potentially a decent sign for stocks, and particularly the growth sector of the market, which has been under a lot of pressure lately because of higher rates. Rates, like I said this morning, are coming down on the 10-year Treasury. That's going to help give a little bit of lift to the NASDAQ as well. Now, to the market's perspective, yesterday the market did try to rally a bit, failed, did wind up about break even yesterday from where we opened. So we're still flirting with this 3 standard deviation move to the downside below the moving average. Markets are deeply oversold on every measure that we track. Markets have a deep oversold, very negative investor sentiment. The number of stocks trading above their 200-day moving average on the NASDAQ is now at levels that we haven't seen since the financial crisis lows. So again, there is a lot of fuel here for a potential rally, and some good news on the inflation front may very well be the catalyst to help lift the index back up towards about 424-ish on SPY. So currently we're trading right about 400. Again, a 24 to 25 point advance on the S&P over a few day period would not be surprising here given the amount of fuel currently sitting in this market from this oversold condition. But again, we need enough of an advance here to turn these indicators into buy signals. We haven't been able to do that yet, but historically speaking, when these deep oversold conditions do turn higher, they have typically coincided with at least decent short-term rallies in the markets. We saw this back in February, saw it again in March. We had a very nice advance in March, and even a move back to the 200-day moving average would be about 47 points higher on the S&P. So again, reasonable trading opportunity here, minimal downside risk, unless the inflation print comes in higher and we start to break these recent lows here. That would suggest a move lower. So again, we're sitting on very strong support here that needs to hold. Any failure at this level is going to warrant reducing risk in portfolios, regardless of the fact that we are so very oversold here. Monitoring this very closely will keep you up to date. That's 3 Minutes on Markets and Money. Be back here tomorrow with an update.